Guys, it's Harry here, and today we're going to answer the question, will software stocks ever recover? And this is what the charts are telling me. So remember, this is according to my own research and my own opinion. This is all chart-based stuff. That's the way I invest. If you want to get more detail into how I do things and you like the way I do this resonates with you, check out my free newsletter. The link to that will be in the description. So what happened to software stocks? Essentially, I've got some words there, so you want to pause it and read it, but I'll skim through it. So they did a huge move post-COVID. Microsoft, Salesforce, Oracle, SAP, the ETF as well, the iShares ETF. Big moves, massive moves, great trades, great investments there. But now they've slid back down. The sell-off was brutal in 2022, like for a lot of assets and a lot of stocks. Came back up and now it's kind of coming back down. And the whole narrative is around, has AI killed coding, or is AI killing coding? Is coding becoming redundant? Are software engineers becoming redundant because you can go on Claude Code or whatever AI and you can actually just put something together? Who knows? You can't predict the future, but ultimately monthly market structure breaks have happened across the board. You've had Microsoft here, have a monthly close there, bearish. The ETF, bearish there, and then just continuing to fall, and it looks like maybe it can make a new low. And also it's closing below this 2021 level. We've had a close below there. You could argue, okay, cool, we could maybe come back down here and we could just range for a bit. CRM, Salesforce, again, closes below here and doesn't look like it's recovering anytime soon. Looks like it's going to probably come down here. There's not much stopping it. Typically, what you will have on a chart, if a situation like this, it will just run here, tag it, and then you can maybe get a better idea. So maybe that takes a couple months, retest that. Maybe you just get a wick, close back inside. Okay, cool, we're good to maybe move up again. You can only, these things you need to develop a process and a system around, but I think it's always good to think of plans and think of potential paths maybe if you do want to be active in it. Oracle, again, monthly market structure break and coming back down to this level for a retest, and there, if that holds, could be good, could be see a move back up there, but we can only wait and see. And then it's SAP just having a free fall, shall I say, just back down there, and potentially kind of going to come back down to this level and going back there. So what are my expectations? The charts say not yet. The charts say let's be patient. Broken monthly structure takes time. It does take a while. You've got to be patient. Now, the monthly is really zooming out. If you go onto a daily, you might get a different perspective, a weekly, a different perspective. But I think the monthly was really important to look at because it just gives you that broader context of really where we're at. Because this ETF, if you go back in time, has been on an absolute tear. It's been in a bull market, within a broader tech bull market, almost like a sector within a sector. And could you argue, is the capital going to fly elsewhere to maybe like AI stocks or something like that? So all the stocks, are telling the same story. The monthly charts are broken. They're going to need time. Price is closing back inside some prior ranges. And yeah, they've had big moves, these stocks, or some of them have. And it's going to take time. So patience is the end of the game. So the charts say, not yet, hold off. You want to see a monthly market structure break bullish. It's like, okay, cool, nice one. This could be something. However, I look on the lower time frames, but if you want that broader context, monthly market structure breaks are definitely key. I do have a video about market structure breaks, so please do go check that out. That's somewhere on my channel as well. So could this be an accumulation zone? So if you're a value investor, I'm not a value investor, but you could make the argument, AI and other stocks is where the momentum is. Microsoft is really cheap because Microsoft is still a great company. Everyone still uses Microsoft, Word, Excel, Outlook, all these things. And are these actually, quiet? I've talked about this a lot. This is where you want to be watching these things. When no one's watching something, that's where the money's made. Because if structures start to reclaim and no one's talking about it, they could really be under-owned relative to other things. And yeah, the bigger the base, the bigger potential move. So if software stocks spend months, if not years, just building that base and building that accumulation, that could be really good for a big move. You could still see it sliding down. It's like, okay, cool, let's wait. But you could just see a massive high time frame range, and accumulation zones, they're boring, but that would be perfect. A good example you could argue is the lost decade. I believe it was the 2000s. The stock market didn't make it near all-time highs, but if you just accumulated there, you did exceptionally well. But you didn't make any money in the short term, but 10, 20 years time, you know, your portfolio will look good. So you've got to have that long-term approach, especially when you look on the monthly chart. And look, chop is going to happen, so I wouldn't want to be catching a falling knife if it's dropping or if it's chopping around. Take little stabs if you want to like buy a little bit or start accumulating. Start thinking of these things, but ultimately I wouldn't get too excited. And yeah, it could take months, if not years, to resolve. You know, high time frame investing is patience. That's where the big money's made. Yes, you can make money day trading and scalping, but I believe, you know, the big money is in those big swings or in these big accumulations, those where it's just building a base for a long time. So what I'm waiting for, monthly market structure breaks to the upside, as I mentioned earlier. That was just like, okay, cool, this could turn into something. That's an early indicator. More in the short term, a bullish EMA cross on a shorter time frame, so the 33-day and 200-day EMA would give me that early confirmation, like, okay, cool, on the daily we're starting to build something. You know, both together, you know, would be a good setup. Like if you've got bullish monthly market structure with a, you know, those bullish short-term EMAs, that'd be a good place to maybe take a momentum trade. But yeah, for me, it's just I'm watching, I'm waiting. You know, when it comes to these things, patience will be the game. But it's interesting to see, you know, has AI killed off coding? We'll wait. We'll find out. But it definitely is an interesting narrative to, you know, unpack. So look, monthly market structure breaks are broken across the sector. Choppers most likely outcome in the, you know, in the near term. I'm not buying yet, but I have signals to make me start to get entertained and start to get interested on this. Even a weekly market structure break. So one thing that I do think is good. If you have bullish 33-day and 200-day EMA, so they're bullish, and then if you have a bullish weekly structure, and then if it comes back down, but then it goes back bullish, that could be a really good sign because you've got that underlying strength of the EMAs are like a you know, long-term structure, and then if price goes down, you could either wait for a retest of one of those EMAs and then for it to go back up. Okay, cool, there is some strength there. So that's what I'll be waiting for. As I mentioned earlier, guys, please do check out my free newsletter. Link to that will be in the description. And yeah, I will see you in the next one.